Good morning, traders. It is October 15th. This is Steve, aka Speculator. I just wanted to go through some sentiment indicators. A couple people online had asked me what I'm seeing and why I'm bullish. I kind of feel lonely over here in this camp. It has been just an insane last few weeks and months with all of this trade talks, and I finally got a little bit of clarity the other day, and I was on Twitter, and people were, extremely um, negative on the trade talks, and with probably good reason. There's a very good reason to be cynical about it, which I'll go through, but anyway, I just felt like I needed a break from Twitter, which I'm sure you've all felt before. But anyway, I wanted to really quickly go through a couple things that I'm seeing, and how sentiment indicators are dovetailing with seasonality. I wanted to go through how I think the trade talks are actually going to end up being another plus for the market, believe it or not. I wanted to go through how Trump is, despite politics, I hate talking politics. I want nothing to do with politics, but he's just become a second backstop in the market, in my opinion. The other thing is, I wanted to go through what I kind of felt like that last 30-minute sell-off was on Friday. It's kind of that day to me was a turning point. Um, I wanted to go through some earnings and what it means and how low estimates are right now. And then, if I'm wrong with my bull case here, how am I wrong? What are the things that could make me wrong? So I did some bullet points here. I haven't done a video in years, so forgive me if I'm going too slow or getting too boring. I'll try to make it interesting. Okay, so let's start off with some sentiment indicators. First, this is the one of the major ones I follow, CBOE option equity put call ratio. So this is the equity put call ratio, and I've this is a 1 year, 7 month graphic of the equity put call, and I have a 10-day moving average on this. So you can see, you know, kind of the obvious when the market gets really bearish, a lot of puts are getting purchased, like up in here in May and in August, and the 10-day moving average starts to decline from a high, and that's usually, when you want to start thinking about being long. So we have a similar situation forming here. All that's kind of basic. The one thing that I'm not sure a lot of people see is this can actually give pretty good signals for turning points. Like when you see a move from a huge high to a huge low, huge high to a huge low, huge high to a huge low, those are usually, not always, um, like good turning, intermediate term turning points in the market. So the Christmas miracle at the end of 2018, huge put buying here, and then within the next few days, huge call buying. That was turned out to be a huge turning point. Um, pretty. This one was definitely not as defined, but in May, same similar situation happened. Very end of May, early June, it was a turning point. Same in August. These kind of nothing was as well defined as the Christmas miracle, but you see what I mean here. When you get these huge moves from high to low, and we just got one of those in October. Um, I think this was around October 7th or so. And then this was Friday. So, I'm looking for that. I'm looking to that to kind of, tell me that there was a turning point in the talks on Friday. This is, I like to look at stocks that are, 50% above, or sorry, stocks trading over their 50-day moving average divided by stocks trading above their 200-day moving average. This is sort of a breadth indicator for me. So I put a Bollinger Band on it, and you can see it gives you rough ideas when breadth is really low and then it reverses. So we kind of have a bit of a reversal here, just like the reversal we had in August. Bullet bullish percent index turned positive on Friday. This is an intermediate term indicator for me. Same with NASI, which is the NASDAQ McClellan Summation Index. It just turned positive yesterday. I'm looking for some follow through today, but this is another intermediate term indicator for me. Um, this is just the SPX, and I have a bunch of indicators down here. The regular put to call, this includes index options. This spiked in early October too, so you had a spike of fear, which is good to see. We also had a spike yesterday when the market didn't really follow through, um, and we had the low volume Columbus Day trading. Then the McClellan oscillator. All I'm seeing here is this bottom that happened in August is very similar to what's going on here, and now we're getting a push up, and we still have plenty of room. The fact that it's in the middle here is kind of telling us, there could be some more consolidation, but I like the fact that we have a lot more room to move up here. And then the all important AD line, advanced decline line for the NYSE. This one, I mean, every day, I see people on Twitter getting very negative and expecting a crash, but every day this thing goes up. I mean, it made a bottom here in October. You need to look at this every day if you're not looking at it, because as long as this thing is trending up, there's no reason to get short yet. There will be a time to get short, but the market is not telling you right now, in my opinion, that it's time. Okay, and then this is the um, AAI AAII Bull Bear Survey. Um, these red lines here um, are points of extreme bullishness. Um, this is when you would want to be getting short. But this here, these purple lines here, are showing you that right now sentiment is extremely negative. Um, we're talking back to levels, that we're seeing around Christmas time. I mean, there's a lot of negative sentiment out there. Okay, so those are a lot of the major indicators I follow. The other thing I wanted to hit is some headlines, and I just have one example here. I keep I keep seeing things like this literally all over the financial press. Investors are flocking to money markets at the highest rate since the financial crisis. Money market funds have pulled in 322 billion over the last 6 months, the fastest pace since the financial crisis. And then they do say the good news is shortly after that gloomy period, investors had the buying opportunity of a lifetime. Um, so this is just one example. I'm seeing these all over the place. Okay, so all of these indicators to me are dovetailing with seasonality. I don't get so much into seasonality, but in the last year in trading, I really have noticed that how things change from month to month and quarter to quarter. It's amazing. I never really picked up on that before until this last year. But if you want to see what I'm talking about, look how sentiment changes when a month ends and the next month begins. It can be like night and day. Um, Same, and it's even amplified more when a quarter ends and then the next quarter begins. So anyway, this blue line here is the 20 years worth of data that's showing how the market generally trades. So you can see from basically January to May, there's generally an uptrend, then things move sideways. Um, all the way to October. Generally you get a bottom around October 10th, and the market pushes into the year end. This is where the phrase comes, sell in May and go away. Um, and you can see this year, 2019, how the Dow has sort of tracked this. Generally had an up move. I mean, not it's not perfect, but what I'm looking for, and all the sentiment indicators that I look at are sort of telling me similar things, that it's ripe for a move from now into year end. Okay, another thing that I forgot to hit that I want to go back real quick is, and let me just open up TradingView real quick. Um, so I want to go through, if you follow my stream, a lot of times I look at safe assets to see where money is flowing. So there's four main safe assets that I look at. XLU, TLT, gold, and then the Japanese yen. Let me just take off extended hours. Okay, and go to a daily. Okay, so the XLU, it's kind of rolling over. Nothing big yet. Utilities have been huge all year long. I mean, they've been straight up since the beginning of 2019. But we're seeing some turnover here. Bonds, we had this nice move down that on pretty big volume that's telling me that money started flowing out of bonds last week. We'll see if it can continue. It might just go into a consolidation pattern here, but money is flowing out of bonds. You can't really doubt that right now. Gold, this is something I trade on a daily basis, and it is forming a very rounded top. I noticed that it tends to go up quickly on any negative headline to do with trade, but then inevitably the momentum kind of wears off and it just starts backing down again. I don't know. This is definitely kind of like a head and shoulders-y top here. I don't know if it'll break down and continue down, but right now this is negative to me, and it looks like money, big volume days, money flowing out of gold. It could very well consolidate and continue up, but in any case, there's another big asset where it looks to me like money is flowing out. And then finally, the Japanese yen, which is considered a safe asset. We had a big kind of sell-off last week. Um, so generally, to me, these main four safe assets are telling me that money is flowing out of these, and where will that money end up? Very likely, it ends up in equities. Okay, just real quick, going back to the trade talks. So last Friday, Twitter was very cynical about, what had happened on with the trade talks with Trump. A lot of people didn't think it was really a deal, and it's really not. Nothing's been signed. Um, so you do have to be pretty cynical about it. But what it did mean to me is that all of a sudden now Trump is okay with a phased approach where he wasn't okay with that before. So he's showing that he will be a little bit more flexible. He knows that if he doesn't, um, the markets could very easily crash, and the Chinese know that too, and that neither country wants their markets crashing. And I know a lot of people are saying, "Oh, the Chinese could wait this out," and they can, but they don't. I mean, the crashing markets do a ton of damage to businesses, do a ton of damage to the consumer. Neither side wants that. Um, so I guess my point here is that both sides are going to do whatever it takes to prevent crashing markets. And the other thing that has occurred to me is that until we get a signed deal, this is one of these type of events where it's just another brick in the wall of worry. It's a perfect opportunity for the market to create huge amounts of doubt and still keep going higher, which is what it loves to do. The market loves to throw these scary things out there, and while everyone is paralyzed and doesn't want to put money to work, it goes higher. Okay, and next, Trump is just amazingly hyper aware of markets. I saw an article the other day saying that there really is a connection with um, a candidate being reelected, and it's how the market has performed. There's a huge correlation there. So Trump is hyper aware of this, and you can see like on a Sunday evening, he repeatedly does this, tweets, something positive right before futures open. It's usually about 5:45, 5:50 Eastern time, on Sunday evening. Futures open at 6, and he repeatedly does this. It's so obvious. So he's essentially become a second backstop. We already have the FOMC. Trump and his minions are pretty much another a second backstop, which we've never really had before with any other president. Whenever things get a little too bearish, they come up with some story, whether it's true or not, to inject a little bit of positive sentiment into the market. And so far, it hasn't gotten to a point where it's the boy who cried wolf scenario. It still works after all this time, which just amazes me. But okay, so that's Trump, and then I just wanted to take a couple minutes on the last 30-minute sell-off on this past Friday. Um, that was an option expiration day, and that sell-off, I felt like a lot of people assigned a ton of meaning to that. It did come out with some press saying that they were the administration was okay with phasing the trade talks now, which was new, and then also that nothing had been signed. That right out at that news, that was when it did sell off. So, it's kind of expected that traders would say, okay, maybe the deal doesn't mean all that much. There was definitely some hidden meaning there, though, as I talked about before, that now Trump is okay with phases. I think that's significant. It's also significant that he's willing to take a step forward by only getting crop purchases. So it's almost like maybe he's backing down a little bit. I don't think he will back down, but he's now willing to say, okay, we need a little bit of progress, so let's put a few small things into a phase one, um, which I think will help the market. But the other thing about that Friday was, as we saw in the equity put to call ratio, how it had just dropped hard to 0.51. That showed that there was a ton of end of day call buying there. And a lot of those calls could have been same day, Friday call purchases. So, I don't really fully believe in the market maker theory, but um, it did make sense that the market reversed hard to wash some of that fast money out of the market, and probably expired a lot of those puts or those calls worthless. So, there's a lot of mechanism in the market that people try to assign meaning to, that it's just a mechanism that the market uses to clean up traders. And I think that was, part of that was seen on Friday. Okay, real quick bullet here. We've had so much sideways movement for the past, like, I don't know, 18 months or so, as earnings have been in a three-quarter stalemate. We've sort of had no earnings growth, well, for 2 quarters now, but this current quarter, which I'll get to in a minute, there's another negative estimate. So it makes sense that the market has been moving sideways because, earnings have not been growing for basically 3 quarters in a row. And this type of action that we've seen in the market, it serves to clean up traders. It's basically big fish taking out small fish. Yeah, these gaps that you see in the market, they are crushing fast money option traders. I mean, people, just think about it. Somebody gets short on puts here, and then the next day you're just wrecked. And this has been happening repeatedly. It's the market is excellent at like catching people off sides, as we all know. So these huge gaps are just blowing people out of the water. So this has been going on, how long have we been going sideways? Technically since January of 2018. It's been pretty much a sideways market, although huge up and down moves. Um, okay, so finally, earnings. Um, Earnings are forecasted to be negative 4.6 for the S&P 500, negative 4.6%. This will be the third quarter in a row of negative earnings. This is amazing to me. So the bar is extremely low for earnings right now, which is another um, reason to be bullish, in my opinion. Pretty much every quarter, estimates are beaten because analysts always lower the bar lower than they think that the company will beat. So if I switch over here to and I recommend you guys take a look at FactSet Earnings Insight. They publish this once a week. This is the October 11th one. Um, you can just Google FactSet and Earnings Insight and you'll find this. But see, for Q3 2019, the estimating earnings decline for the S&P 500 is negative 4.6. Last week it was 4.1 or negative 4.1, so it's been declining. Um, this is big on sentiment. This means that the bar is set really low, and if companies start beating, then we have a chance to turn sentiment around. And we're kind of already seeing it this morning. A lot of the banks, J.P. Morgan, Citigroup, they're the first to report here, but so far they've been beating. Um, this is also pretty interesting. A lot of companies, FactSet does a good job of pulling out what companies are saying the source of misses might be. There's only been 22 earnings call, but so far, but you can see a lot of companies blaming FX, currency, weather, um, Europe. Tariffs is down here. So you had four companies blaming tariffs in Q3, which is up from, oh, I'm sorry, tariffs are here. You only had five companies blaming tariffs, whereas you had eight last year or last quarter at the same time. So, and then they take some quotes from the conference calls. So this is good to see. You can kind of see what CEOs and CFOs are thinking about. Um, but so just my general point here is that, the earnings bar is very low. So that could also be a good thing if you kind of dovetail it with seasonality and the sentiment indicators that we're seeing. Okay, so how do I know if my bull case is wrong? Well, things could blow up with trade. FOMC could be an issue, and I just want to touch on that real quick. Um, okay, this is the CBOE Fed Watch, sorry, the CME Fed Watch tool. So if you go to the October Fed meeting, which is on October 30th, there's a 72% chance right now that we're going to get a 25 basis point cut. So this prior to the FOMC minutes being released last week, this was over 80.5%. So it's still, we're very likely going to get a cut at this October 30th meeting, but this has come down a lot. But what really moved was the percentage chance of a cut at the December meeting. Prior to FOMC minutes last week, this was up at like 40, mid 40 percentage. And so it's come down almost like 20% here. So this is one thing I'm watching. This could have, an impact on the market. Once we get to a point where the market's like, whoa, the rate cuts are pretty much done. So we'll have to see how the market digests that. It looks like right now we've had 3 rate cuts, and that may be all that we will get. And then finally, the other thing that could prove my bull case wrong here is that third quarter earnings could be worse than expected. So this is really what I'll be watching over the next week, since we're having a landslide of earnings here. Um, so that's it. Basically what I'm seeing is sentiment indicators being at uh, all-time lows on a lot of them, including the AAII. The Some of my intermediate term indicators have just turned positive. All the headlines are very negative. Money is just beginning to flow out of safe assets, and that's dovetailing with, the seasonality where we could get a push into, um, end of year. And on top of that, that kind of jives with a very low bar set for earnings. So that's it. So that's what I'm seeing. That's why I'm bullish, and I'm gonna stay bullish until I'm proven wrong. Oh, another bullet point that I should have put here is the 200-day moving average. That's another point where if we break the 200-day on SPX and the other indices, then there's something wrong. So anyway, just wanted to share that. Hope this helps. Good luck trading.